Otherwise, as long as it can stay above, then we can see it continue up a lot higher to the 950 target that I spoke about before. Nvidia satisfied my target of 950 almost instantaneously to start last week. If you remember in the last video we did here on YouTube, I mentioned my target of 950 because there was a bullish pattern. We did see that bounce not only on Monday, but there was also a nice pullback over here on Tuesday around 930, and this also produced an additional bounce back up into the low 950s. And of course, unless you've been living under a rock, you probably noticed last week that after earnings over here on Wednesday after hours, Nvidia went all the way up to satisfy 1,000 the next day. This is just absurd that we're all the way up here right now. A lot of bullish signs in terms of the short term here, but just overall in terms of the macro, if we look very quickly here at the daily chart, just been an insane rally for the last like 1.5 to 2 years so far. You can see it's all started all the way back here with this inverse head and shoulder. Of course, there's a lot more that goes into it, like AI, the AI bubble that we're in right now, but there was some technicals to back it. There was a lot of fundamentals to back it, and just been ripping ever since. And something interesting that I found last week, you can see here, if you compare this to Intel as of recently, they were trading relatively in tandem in both an uptrend until around the start of this year for 2024. And you can see here, Intel has been falling ever since it had its high over here at the end of last year, and Nvidia has just continued to rip to the upside even more substantially than it was in the previous 2 years. So this has been pretty crazy because you could see just continuous downside here for Intel and just continuous upside for Nvidia. So there's a huge divergence there right now, but regardless, a very nice bounce for Nvidia just for continuation to satisfy that 1,000. And it looks like they're now going to do a forward stock split as well, so that's going to be interesting to see. It reminds me of Tesla really back in 2020 and 2021 when it was running. But regardless of that, if you look at the flow here, we're seeing a lot of monetization of calls. Go figure. Obviously, if you were in calls beforehand, especially around that 1,000 strike, you're probably going to want to monetize those just because you will be up quite a bit. And we saw something interesting. If you look at the Twitter before earnings, there were a couple of those 1,000 calls that hit the tape. I believe it was like 10 minutes before the session closed. And then, of course, earnings was after hours there, and those ended up doing very nicely. So part of those people are the ones monetizing here. And of course, there's other ones as well. But throughout the day, we also saw some variety in terms of overall flow. There were a couple puts here. I wouldn't really put too much weight into these. You have to see a lot of puts to come through to be confident this thing is going to turn over. So just seeing 2 is not much. Really, you have to compare it to the amount of calls we've been seeing lately, which has just been overwhelming majority of the prints that have hit the tape. And you can see there's also been calls. So I'd consider this to be pretty mixed. I don't really see much of a bias based on this, other than the fact that we're looking at a lot of monetization. But going into earnings, there was a very prevalent bullish skew in terms of call flow. So that's something we did definitely see beforehand. But really what I want to talk about today isn't Nvidia. This move already developed. I don't really have too much more alpha to provide based on this, since we did have that short-term bullish signals and we did have that continuation all the way up through earnings for last week. So it is a bit in no man's land right now. What I want to focus on though is the S&P 500. And you can see here, I have 3 words. I have bullish, sideways, and bearish. And these 3 words have a corresponding level attached to them. And this is going to decide where our bias is going forward throughout this week and possibly beyond. And the reason I have each of these words on here is because, well, one, you can see up here, we have a key resistance level. We have a resistance detected as a rejection spot 1, 2, 3, and 4, and possibly even 5 times as of just last week and Friday of the previous week alone. So this shows that there's a lot of supply up here. There's been a lot of difficulty for bulls to get it above this level. And the fact, and this is a bit of a tip here, the fact that we had a gap and crap scenario, this means that you have a gap up, a relatively substantial gap up at that, and you have it break down to close the daily back below where the previous close was. That's considered a gap and crap, like you can see here. This is a very bearish sign and shows that buyers were unable to support a breakout above the previous resistance level, because you can see here the 30-minute candle got wiped out, went all the way down and had this hard rejection with an additional rejection later on in the session. This is very bearish, and the fact that we continue down is no surprise. However, what's even more interesting to me is if you look at the range we have here, we give the lower end of this range as the blue line, and the top, of course, what I just shared with you, the red line. We went below it on the daily, but the following day it gapped up and reclaimed the range on not only the daily but also the weekly, because this was Friday's close. That's very interesting to me because we've had 2 attempts now to break out of this mini range that I just showed you. Remember, both the blue and the red make up the range. We had an attempt to break out. which was a failure, and we'd attempt to break down, which was a failure. So that shows me that now we have a slightly wider range, but once this range breaks, we're going to have a trend move, likely about 75 to 100 points at least in whatever direction it breaks. What do I mean by that? For example, if we break above my 5,323 level, it's highly likely we see continuation for another 75 to 100 points after, just because, like I showed you before, bulls were unable to break above this range from the 30-minute to hourly candles. So we had some price discovery above over here, but we never were able to hold above. That shows that bears were able to step in over a longer time horizon. If you look just based on 30-minute to hourly plus candles, which is what I'm doing right here. So we haven't seen that breakout be confirmed yet on a longer candle. That's what I'd like to see, at least for a bullish setup here, is if we can have a breakout above 5,323, preferably on the hourly candle. If that can happen, that shows me confirmation we're likely going to continue up. Your risk in that case would be a breakdown back below the previous hourly candle. For example, and I'll draw it out for you here, let's say we were to trade tomorrow, and this is going to be, by the way, this is going to be very dependent on how we trade early on in the week. So I'm giving you a hypothetical here because realistically, I don't know what part of this range is going to decide to break. I'm going to leave that up to the market. What I can do and what I can act on is confirmation above and below the range. So let's say we trade up here, maybe the initial rejection off that spot, since there's clearly a lot of supply like I just mentioned before, but then we have an hourly candle where it breaks above like this, and let's say we close 5,332. Well, that's going to be a sign that I can enter at 5,332, and my risk in that case will be a breakdown back below that previous candle. Let's say this is the entirety of that hourly candle. If in the future, whether it's the same day or a following day, we have an hourly candle that closes back below where that previous level is, we'll just say here, the bottom, the base of the candle, and the base of the candle is what I'm showing you right here. This is the base of the candle. Over here, this would be another base of the candle, just the lower end of the body of the candle, which would be in this case right here. Again, this is hypothetical, but if we were to have a breakdown below that level, then I would stop out. Otherwise, there's a high probability that we will continue up a lot higher and have that breakout. Maybe it even wants to retest this level again, but as long as it holds above that previous base of the candle on the hourly, then I can continue to hold and can expect it to have continuation to the upside. This would be the bullish scenario, of course, if we were to break above. Now, the inverse here, we can see a break below, maybe later on the week, like Tuesday or Wednesday. Let's say we trade back down below, like so, and we have a breakdown back under on an hourly candle. I can do the inverse and short with the same principle as risk, being a hourly candle closed back above. We'll just call the hourly candle right here. Let's say the base is right there, 5,262. If we were to go back above and close the hourly candle, then I would get out of that position. Those are two scenarios that I can trade based off of that both require confirmation. So the benefit of waiting for confirmation in scenarios like these is you don't have to predict which side it's going to break. All you have to do is wait for it to break out, and then you can take a setup accordingly. That's a big benefit. And until we have that confirmation for either side, whether it's the bearish side or the bullish side, we're going to trade, as you can see the word here, sideways. And we're going to trade sideways in between both this blue line and this red line. And if we were to break below the blue line, which is the previous support level for this range, we're just going to trade sideways in between here. So for example, I know there's a lot of lines on here, but for example, if we were to go back like this, back and forth, kind of like that until it decides to break, that's a possibility. Or maybe even early on this week, we were to break down below, maybe bounce from here, bounce to the top, and then it decides to break down. Those are some scenarios. Again, my goal here as a trader is not to try to predict what side of the range price is going to break from. It's to react to that break. There's a time and place for predicting what direction a range break can happen, but because we're at all-time highs right now in this all-time high range, it's kind of up for grabs where the market wants to go. So I'm going to let it decide, and then I'm going to take a trade based on whatever it gives me in terms of confirmation. That's what I plan to do, very similar to what I just shared with you here. And hopefully that is helpful for this week. And the last thing I do want to mention here is, along with the fact that we're at all-time highs, VIX has been subdued quite a bit. We're in the 11s right now. Pretty incredible to think about that. All the signs so far, again, if you just look at the daily here, are towards downside and vol. So it is interesting that we were able to go below the previous low that occurred back in December. So in terms of someone being bearish in the market, which would be inverse of VIX, for the most part, this is a good sign that we had some type of a bottoming candle here. However, if we were to have a daily close back below where this bottom was on the VIX from Thursday of last week, it's pretty likely we're going to stay stay subdued around here. And really, even if we stay above it, let's say within the 12 to 13 range, it's pretty likely we stay in a consolidation range until it gets enough strength to base around this range and then continue up. Historically speaking, during the summer months, equities tend to exhibit less volatility. Doesn't mean that it has to repeat in this case. However, that tends to be the case just based on history, especially in a presidential year. Otherwise, hopefully that was helpful, especially what I'm looking at for the S&P 500 for this week. And other than that, I will see you guys in the next video.